Hello and welcome everybody to a new video for course number 2 from the MMXM Trader. We have comprised all the frequently asked questions from the Telegram group, right, the private group chat, and we're going to be putting it all together in this video and explaining you with some examples on what to do step by step. So we're going to be putting it all together. Let's start off with a blank chart, and we're going to break down this whole piece of price action to see what you need to look for and what confirms our direction, etc. So first of all, what are we going to determine? We need to identify the overall order flow, right? So that is that market profile. So are we bullish? Are we bearish? Or are we consolidating? Now, if you go back to the chart, right, you can go back in the video a little bit. We are clearly bullish on that chart, right? Why? Because first of all, we are rejecting lows and breaking the highs. Those down close candles are supporting price higher. Furthermore, we are disrespecting bearish PD arrays. And after that SMT on the lows, we'll see an expansion higher. So what does that look like on that blank chart, right? We added some lipstick over here. So first of all, we are rejecting lows, right? And breaking above all those old highs. Same thing over here. We are rejecting this low here, and then we're breaking higher above all those candles highs, right? Then we have those down close candles where price comes back into to continue up higher. Same thing over here. We have down close candle over here. Price comes back into it and then expands higher. So we already determined two things what is gonna give us a good sense of the order flow. We have SMT on the low as well, and you can see after that SMT, every time there is an expansion. Same thing over here, right? On these lows, SMT, and then it expands higher as well. Now, we have identified the direction in which we want to trade. So now we need to identify the current high and low price is working within. So everything else outside of that is irrelevant. Now price is either gonna do one of three things within that high and low. It's either gonna run to the buy stops at the high, or it's gonna run for the sell side at the low, or it's gonna consolidate in between that high and low. Now our market profile is bullish, right? So we are anticipating price to run for the buy side liquidity above that high. Price will either run the sell stops before going to the high, or it's going to retrace to a bullish fair value gap and then expand higher. And a little tip, the bullish fair value gap on a lower time frame is considered sell stops, so the price is always running sell stops before going higher. Now once we have come to that conclusion, we identify our dealing range for premium and discount. So over here we've got that chart, right? The low over here into the high. This is only what's relevant. Everything to the left is not relevant. We had that SMT on the low, so we're going to use this low until this high for our dealing range. Now first of all, what do we need to identify? A key level, right? So what is our key level on this chart? We've got an old low over here, and an old low is also part of the PD array matrix, right? Just like an order block or a fair value gap, this is also a key level. So this key level gets swept over here, right? So now think about the swing model. What do we need to see? Think about the first candle, second candle close inside of that candle, right? And then the third candle we can anticipate to run candle number one's high. So over here, we can see candle number one over here. We hit a key level, then the second candle closes inside of that first candle's range, right? So now we can anticipate the third candle to go for the high of that first candle. So zooming in a little bit, so this is the weekly swing model, right? We are closing inside of candle number one on the weekly, and we're gonna go for a 1 hour SMT and stop hunt. So over here we see 1 hour SMT, right? On this little piece of price action after we swept that sell side liquidity. Now we don't see a double purge over here, right? But on EuroCat there was a double purge, so that is SMT as well. Now, how to use the double purge, a frequently asked question, right? So let's go to the next slide. We've got a crude schematic of price action, right? Just like we saw in the previous example, we've got a key discount level, right? A key level important. Candle number one, we want to see a double purge, right? And then the second candle taking out the low of the first candle into a key discount level and then close within candles number one. Then the third candle, we want to look for our opportunity to go long, because now we anticipate that third candle, right, to go for candle number 1's high. You can see a double purge over here as well, and that is for continuation. So first candle, right, range low gets taken out, double purge in candle number 2 for the reversal, and then in candle number 3 a double purge for continuation higher. So over here we got the EuroCAD chart, right? We had a double purge over here. You can see the highs get taken out first, then the sell side gets taken into that week 1 or candle 1's low, right? And then closing inside of the candle 1's range, right? So this is the double purge for the reversal. Now back to GBP-CAD, we saw that low, right, into the key level where the double purge was, and now we have that SMT over here, right? We just saw on the previous chart that EuroCAD took out the lows, while GBP-CAD down here did not take out the low. So we have SMT, right? So we're gonna focus on the candle number 3 and look for a double purge for continuation, which we can see over here, right? We have this premium and discount of the range. Price does a double purge into discount, then change in the state of delivery, right? We've got a bullish order block formed over here, and then we have a continuation up higher. So here we've got an example of the daily model, right? We have that weekly chart from GBP-CAD previously, right? That week 1's candle got rated and then closed inside. And on the daily, we can see the same thing happening as well. We got this candle over here, taking out the low, right? So on the weekly, we expect the candles to expand higher, right? So on the daily, after we see a low rated and the candle closes inside, we can anticipate the range high of candle number 1 to get taken out. So we can see that over here, right? So candle 1, candle 2, and then the third candle expansion higher. And we're still in that weekly perspective going for those buy stops. We can see the same thing happening over here, right? Candle number 1, we take out the low, candle closes inside of the range after taking out this sell stops down here, and then we can anticipate the third candle expanding higher, taking out candles 1 high. Now we both traded this candle over here, right? So we'll be breaking down what to look for, and we traded it based off the weekly swing model, but you could actually also use the scalp model on that particular day, and we will outline what that looks like. Right, so a little bit more lipstick over here. We got SMT on the lows, right? So this is what we want to see into a key level. We got this order block and this fair value gap is holding. We can see this candle number 1, right? And if we close above, there's a change in the state of delivery. Like we just outlined earlier, we have a candle number 2 closing inside candle number 1's range, and then the third candle expanding higher. So you can focus on the next daily candles as well until we reach those weekly buy stops. So what does that look like? Right, so this is a 15-minute chart, so we're gonna go from the swing model, right, weekly into the 1 hour continuation purge, and then the 15 minutes change in the state of delivery over here. So this is where the MMXM trader took his trade, and you can see that down here, the execution after the change in the state of delivery, right, and the SMT on the lows. Now let's break it down using the concepts taught in the course. You could have traded this, like I mentioned earlier, with the swing point model, with the 1 hour stop run to the 15-minute O2E or OB, or the scalping model in the last video. So personally, he traded it using the weekly bullish swing point and then a 1 hour stop run into a 15-minute OB. But like I explained earlier, you could also use the scalp model, and we'll go there in a second. So over here, right, daily swing low, sell stops rated, and we got a double purge into that key level. So this is what we need to see first. Right, so let's go to the 1 hour chart. We got a 1 hour stop hunt, and we're focusing on this piece of price action over here, right? So looking at SMT, this is important, right? From this low to this low, we have SMT with EuroCAD, and then in that daily candle as well, on the lower time frame, that 1 hour chart, we got SMT on these lows here. Now, what does it look like? You want to be a buyer below daily opening price, right? New York midnight. So we got that over here. Price manipulates lower, taking out that 1 hour low, right? So a 1 hour stop hunt. Then price expands higher using this 1 hour order block over here into discount. And then we see on the 15-minute chart, right? We see the change in the state of delivery. And that is literally the entry the MMXM trader took for this chart. So you could have also traded this with the scalping model. So personally, he did not trade it with the scalping model. He did it with the swing point model. So what does that look like, right? We're anticipating an open, low, high close for the 9 a.m. candle. That's that 4-hour candle, right? So we want to see that previous 4-hour candle low get ran and then continuation up higher. So what does that look like, right? We run this previous 4-hour candles low, right? 9 a.m. candle takes out that low. And the previous day we already rated that London session low over here. And then focus on the 1-hour chart, right? We want to see that 8 a.m., 9 a.m., and then 10 a.m. So we run 8 a.m.'s low, right? Close inside of candle number 1. You can see that over here. So we're taking this candle's range, right? Candle number 1 low gets rated and we close inside. Now we can anticipate the 10 a.m. candle to continue up bullish and taking out that candle number 1's range and going for those buy stops up higher.